Welcome back to the Daily Drum on WHUR and Sirius XM, Channel 141. This is the Insight segment. I'm Harold Fisher. This is the day that many of us love to hate. It is the deadline to get your taxes done. And while the clock is still ticking, some tips this evening for those tax procrastinators are going to be shared with you tonight. Plus, if you've already filed, we have some tax hacks to keep in mind for next year. Joining me to talk about this is Salome Tinker. She's certified public accountant and managing partner at TSC Enterprises. Salome, thank you so much for joining the conversation again. We talk to you just about every year, and so we're right back at it.
Certainly a pleasure to be here. So, yeah.
Let me share a few fast facts, first of all. Now, today is actually the 70th anniversary of the April 15th federal income tax filing deadline. And that deadline was moved to April 15th from March 15th back in 1955. On April 4th, the IRS had already received 101,422,000 individual income tax returns for the 2025 tax filing season. Millions more have yet to file, and 31% of Americans admit to procrastinating when they file their taxes. The average refund this year, $3,116. That's up from $3,011 last year. I want to talk to you, first of all, about the federal government upheaval that we have seen. A lot of people are a little more anxious when it comes to paying their taxes or filing their taxes. What have your clients been telling you? Are they concerned about possibly even being audited?
Not necessarily. Again, because we're here in the DMV, the Maryland, DC, and Virginia area, a lot of our clients are impacted by, all of the rifts that are occurring within the federal government and how
Mhm.
to account for that money, if you will. Pretty much, if someone, we found that if you haven't filed by now, you probably owe. The
Right.
procrastination is pretty much due to owing or the uncertainty of owing, and so there's a fear that come amongst us that are in that kind of bracket that think they owe, that they'll just wait and wait and wait because in their minds, until they actually file, there's no liability yet, if you will. So
Mhm.
that's what we pretty much have found. If you wait until today, or that you maybe you own a company or something, or like that, is just overburdensome or complicated.
Mm. I don't want to jump too far ahead, but something that you just said occurred to me. If this is the 2024 tax season, but for example, if you're a federal government worker who may have lost his or her job in February
Mhm.
and and are still looking now in April, so that's March, April, you're now looking at 2 months. Let us say, for the sake of this conversation, that you don't find a job until say June, assuming that you haven't been receiving any money from the federal government, because we know some people have taken that deferred retirement, others don't know what their situation is. But if you
Mhm.
haven't received any money between February and say June, what impact will that have on your taxes next year?
Well, and all cases are different. I know that the government said that, for instance, maybe you took the early retirement, right?
Right.
So technically, your money is still going on, right? Or even if maybe they gave you a RIF, I think in certain cases they were still paying, maybe a month out or 2 months. So up until that time, you'll probably be, same, business course as usual. Once you get out of that, you're also eligible to file for unemployment taxes, right? So the good thing, I mean, unemployment insurance.
Right.
So the good thing about that is, if you haven't found the job, generally that amount is not your dollar for dollar salary that you had. So perhaps in next year, that maybe it might move you to a different tax bracket, right? If you were a high income payer, or certainly, hopefully, you will have to pay less taxes because you're in a different bracket. But you want to do make sure that in the unemployment that they're also taking taxes out, because that's another pitfall, is that people, because they're getting a little bit less than they usually get for their salary, that they then say, well, I need all of the money, right? And maybe elect a no exemption extension. And then at the end of the year, you might be subject to owing.
Mhm. I remember several years ago under the Biden administration, there was mass hiring for the IRS to handle the load that
Yep.
that the agency was receiving. Well, now the reverse is happening, where there are people who have been riffed, fired,
Yep.
let go, however you want to put it. What impact do you believe that has had on getting these taxes um, in and out the door for the
Yep.
federal government?
Well, I think that what you'll probably find is that the reason why the Biden administration did that push for hiring is because, again, the tax process was slow. The federal government was down that percentage, and now we have reverted back to that same level, if not lower. So I would suspect that there may be some delays in filing their returns, but predominantly the saving grace is AI, right? I'm assuming that they have incorporated some types of artificial intelligence to maybe to read the basic tax returns, and then maybe have a system to process. Hopefully that's the case, but certainly for our business returns, our high net worth individuals, or even the complex where you may have a rental property or something like that, that may be a little bit more difficult. You might see some shortages or some delayed timing. But up to now, for the people we have filed, we haven't seen that delay. But as you pointed out, not sure where in the process of Doge did the IRS, the laying off process start. So hopefully not. Hopefully they have done it smartly, but there may be some delays as they continue on with the layoffs.
You said something that struck me. You said high net worth individuals. Does that differ from region to region? Because what
Right.
some people may say is high net worth in Columbus, Ohio,
Right.
or Kansas City, Missouri, may not be considered high net worth in the DMV.
Yeah, let me clarify that. Usually, when you have a high net worth individual, they have their hands in a lot of different pots, right? They might own rental properties. They might have, their income divested in other places, which would then relate to a complicated return. So, not necessarily high wealth individuals per se, but a complicated return. Maybe you have a house, you have some rental property, maybe you have a business on the side, so you have a lot of different things that's rolling into your Schedule A, and you're filing different schedules based on those types of activities you're performing, which would then qualify you as not an easy return, if you will, as a person who just has a W-2, and the form is the form, and maybe a house, right? So not necessarily high net worth, but generally those high net worth individuals have a lot of things that they're spending the money on, if you will, to kind of shield from taxes, or invest in tax savings, and therefore will create a complicated return, which then might
Makes
need some
sense.
hands-on or employee intervention to make sure that that return is correct. And in that case, maybe that might be one that might be delayed because of shortages.
I see. Are there any new
Mhm.
laws or changes this year that people need to be aware of if they are perhaps doing their own taxes or finishing up and will make it before tonight's midnight deadline?
Yes, like I said, if a person generally is waiting up until this time, they pretty much think they owe. Now, there's safe harbor provisions that says that you can, as it relates to the safe harbor, if you pay your estimate of what you think you owe within 90 to 110%, the government will not charge you a penalty, right? Which is significant. So, for instance, if you think you owe $5,000, right, and you made
Mhm.
a before the deadline, you made a payment of 4,000 or 6,000 because you're still not sure, the government will not charge you a penalty. They will still charge you the interest for your for what you owe, but you have until the end of the extension to pay that amount, okay, without a penalty for late payment. But say for instance, you know you owe $5,000, but you only pay $250. The government is savvy to that. They were like, nope, that's not good faith. Therefore, you will be charged the penalty and interest. So I suggest that if you look at last year and you owed last year, and you think that your salary is about the same, at least send the payment in for the amount that you owed last year so that you won't have to pay that.
What is interest and what might be the penalty? Does it depend on how much you owe or what?
Yes, the penalty is it depends on how much you owe, but the penalty and interest, let me say that. So again, a double charge, but interest, and it's just interest because at the end of the filing deadline, whatever the government rate of interest is, not a lot, but still, you won't see it if you pay like 2 or 3 days later. I mean, it won't be that significant in terms of the interest piece. It's only if you extend it. Now, if you cannot pay, certainly the government would allow payment plans, and so you can take advantage of that. And my advice that we put a lot of people on payment plans, but just make sure you pay the government as you said you would pay, because as long as you're on the payment plan, you're not considered. A lot of jobs ask, do you owe any government money?
Ah,
Uh,
yeah.
there are people that maybe have their businesses that impact. Maybe you have state contracts or federal contracts, and one of the questions is do you owe the government money? Well, a payment plan does, you can honestly say, no, you don't owe the government money because you are paying as agreed,
I
right?
see.
So that's the other
That's
reason why I would
important.
say.
Yeah, that's very important because a lot of people would normally think, well, if I'm paying but still owe, and if you're being honest, you say, well, yeah, I'm still owing, but how the government sees it may be different.
Right. The government sees that you're paying as agreed. So therefore you're not in a bad situation, if you will, as opposed the government has approved you to pay like this. Therefore, if you pay that monthly payment, then you don't owe until the next month. You understand what I'm saying? So they don't perceive that as owing back taxes in that regard, as long as you're paying as agreed.
Hmm. Tell me about when someone files an extension, because it's my understanding that even if you need to file an extension today, that you still have to pay. That seems incongruent.
Well, that's what I was saying. That if you know you owe money, your extension will allow you not be a penalty, right? But the interest still will accrue on that, and that's why I said the safe harbor says that even with the penalty, if you know you owe, you still got to make the payment, and that's the 90 to 110% kind of factor I was given. Now, if you do not owe, you do not receive a penalty, right? But if you do not owe and you do not file an extension, you'll get a penalty for failure to file, but you won't get any, amount that you owe. There's no interest to be charged on anything because you didn't owe any money.
So
So,
what so if I'm hearing you correctly, if you don't have the money, don't file an extension, file for a payment plan.
well, no, what I'm saying is that if you don't have the money, right, file the
Right.
extension. The extension gives you 6 months, right? 6 months for you to then go and file, right? Now, it does not, you can pay the payment up into the 6 months, right? So there's no penalty. You won't be penalized for not paying because you filed the extension. Your move date moves up, but you will be filed
Oh,
interest charged. You will be charged interest, right?
but
But
no
not the
penalty.
penalty.
Aha.
Right, right.
That that is important. Listen, I'm going to take a quick break, but don't forget you can
Okay.
hear this in every edition of the Daily Drum Insight segment via podcast on WHUR.com, The Original Quiet Storm, with Raheem Devon is next on WHUR. I'm Harold Fisher. This conversation continues on Sirius XM channel 141 and 96.3 HD2 in just a few seconds. Welcome back to the Daily Drum on Sirius XM channel 141. I'm Harold Fisher. We continue our conversation about last-minute tax tips on this April 15th. My guest is Salome Tinker, certified public accountant and managing partner at TSC Enterprises. And before the break, we were talking about that extension, and I think that makes that puts a lot of people at ease because they were thinking, I don't have the money to pay, so why would I file the extension? But it just it moves your date 6 months down the road. And I think that really helps clarify that. How do you think that people can avoid the stress of last minute filing? Because some people owe every single year. What is it that they can do to avoid the anxiety of tax time?
Well, I will tell you, Harold, if we file the extension today for our folks, and the extension is for 6 months, right? You will be surprised how many people come back to us at the end of the 6 months on the last day of the 6 months and say, "Oh my God, I got to file." So,
Oh my God.
so I don't know what else to tell you, but except for to just file, right? Um, if one of the reasons is maybe you might want to do estimated quarterly payments, right? That might take a little pressure off because at the end of the day, you might be looking at a huge bill, and it seems overwhelming, but maybe if you had broke it up within 4 payments over the year, right, the anxiety might be a little less. So, but from my perspective, if you procrastinate on the day of, you're going to procrastinate on the day of after the extension as well. So, all like my
Um,
advice, just file. Let your accountant, walk you through the process. If you file early and you understand that you owe, I would recommend you file early, because you don't have to make the payment if you owe until the deadline, right? And so maybe that'll give you an extra time for you to kind of budget or whatever, or get on the payment plan and to relieve some of the stress. The tax, especially if you owe. If you don't owe, I don't know why you wouldn't file if you're getting a refund. With hard times, you need to take advantage of the refund and use that to, in your living costs. So.
and you talked about breaking things up into quarterly payments, but correct me if I'm wrong here, but you can send the IRS money throughout the year, can't you? It doesn't have to be quarterly.
You can.
You you can send them
No, you
money
can.
any.
You can. Absolutely, absolutely. I was just saying at a minimum, maybe a quarterly, but for instance, there's a lot of ways that you can kind of relieve your tax burden. One could be a second job that you love. For instance, I teach fitness, right? I get paid for it, but that's not my main money. So what I've done in my own personal, it says, okay, you know what? Take all of that money for my taxes, right? So that I can reduce my burden at the end of the year. I would teach it for free anyway, so why not take the check and apply it for my taxes, right? So there are a lot of ways, strategic ways you can kind of get around that. Be careful with the Uber drivers, right? If that's a 1099, then technically you know how much money that you're getting paid. Send the IRS, to your point, every check 20%. Now that seems like a burden to swallow. But if think about the levels of tax brackets you go in. Now, if you're only making less than $6,000, technically, you wouldn't be subject to taxes anyway. You could file, but you wouldn't really have a liability. But as you doing a lot of volume or a lot of it, think about, hey, maybe I need to send a little bit, right? We've shown that you can't put it in your savings account, because then stuff happen, right? Life, you start life, and then you be like, well, let me take that out. So,
Mhm.
just like they say, pay yourself, pay Uncle Sam, right?
Yeah,
It wouldn't be as stressful. And
yeah,
at the end of the
yeah.
day, if you overpay, you'll get the refund back at the end of the year anyway.
Hmm. Let's talk also about mistakes. What are the most common mistakes that people make when they file right before the deadline?
Well, mistakes in general. A lot of people make mistakes in which they did not report all of the W 2s or the 1099s that they've done, right? Maybe they have one job, but they have side jobs, right? Or maybe they got a payment from, say, they had a settlement or something or anything. Or maybe they sold their houses and didn't, forgot about the sale or didn't report that income. And remember that the people who give you the 1099s or the W-2s also give that to the government, right? They give it to the IRS. So what we found, people file, they get a refund back, and then the IRS said, wait a minute, you didn't report this, right? And then therefore that calculation takes them on the O side. So I would think, for most of the constituents, it's something relative to that, that they just forgot a document.
How long should you wait to receive the, your, what is your W-2s or the 1099s, after the first of the year? Some people who may have several jobs or the like, a lot of them come that first month, but
Mm-hmm.
then, and for those people who want to or who would like to file right away,
Mm-hmm.
sometimes they have to wait until February, and they
Well,
don't all come, and then you file, and then here comes another one.
Well, if you get another one, you're required to file them in the return. So let's take it from the business side. From a business perspective, you have in February, they all have to be in, right? So
Hmm.
therefore, you know they have to send it to you by February 1st, and they have to be into the IRS as well. So after that, businesses are subject to penalties, but that does not remove the fact that you knew that you made the money, and therefore the requirement to reporting is still on you. So
Hmm.
as a business owner, I will get penalized for not sending it on time, but you will also get penalizing for not at least estimating what that income was.
Interesting. Okay.
Yeah.
Um, the do tax preparers charge more as you get closer to the deadline? Should a customer expect to pay a little extra if you if I call Salome and say, Salome, I need to file right now instead of last month?
Well, I will say this: as it get closer to the deadlines, what we will probably do is just file the extension, right?
Hmm.
Because what we don't want to do is mess up, right? We are bombarded with tax returns about right now, and in our practice, we just chose, if you're a complicated return, then we'll just go ahead and file the extension for you, so we can take our time, walk it through with you, make sure that we've gotten everything. Because if I file and you owe, and then next you come back with a lot. First of all, if I file and you owe and you really don't owe, you're going to be mad at me. It doesn't matter that you came at 10:55 p.m. you know? So our practices and accounts, I would suggest others to do that. Just go ahead and file the extension. It's not going to hurt them, right? If they owe and they did not pay anyway, they're still gonna, like I said, all the other rules are in effect except you won't get a penalty, right? So that's our practice. We won't let that happen. We'll just file an extension. Or if you call us and say file an extension, we'll file an extension on your behalf.
Mm. What about last minute
But in terms of
deductions?
do well,
Go
let me
ahead.
just answer the question. I'm sorry. A return should not change just because you get close to the deadline. What may happen though, like some people might want an emergency return where they have to off hours and do some work. In that case, there might be something special, but not just for filing the return during normal business hours on the last day. No, it's the same. It should be the same price as if any accountant is charging you more as it get close to the deadline. Again, except for if it's just going in weird hours or something like that. But a return price should just be set.
Okay. What about last minute deductions or credits that people may miss?
Well, hopefully, if you're going to a good preparer, that you won't miss them, and that's why I said that we want to take our time to have the proper conversation with you. Every year is different. If you're a long-standing client this year, to your point, you could have been affected by those. So maybe we need to be looking at something on the terms of maybe there's some type of benefit for you. A lot of policies are changing based on the actions of the president. So just want to make sure that maybe things that you used to have that you are no longer effective, right? And in that case, proper tax strategy and planning, it will help, to kind of to say, okay, if this is gone, how can we replace that so that we wouldn't bear as much of a bigger burden in the following year.
Mhm. The one of the things that we've seen an increase is, online do-it-yourself tax software, and some have been around
Yeah.
for a while.
Yep.
And beyond the obvious that most tax preparers would say, well, yeah, we're going to ask you certain things that maybe these software systems may not. But dig a little deeper for me. I mean, what is the difference? You spoke about AI and the like, and I've only used one of those software programs once. I remember my father used them, quite a bit. I personally like talking to a person so that I can ask more questions. But who are those software programs, those computer programs, good for? Hold on one
Student who
second.
has a
I
job
think
and maybe they
Salome, hold on. I lost you. I didn't hear the beginning of your answer. So again,
okay.
who are those? Who are those? Yeah, I lost your signal there for just a moment, please. But the thing I was asking was about those computer programs that allow people to do their taxes themselves. Who are they good for?
They're good for people, entry level employees, or people again with the simplistic tax returns. People who have maybe a W-2 and even a house will
Okay, I finally have you back. We
appreciate.
apologize to our audience for our technical difficulties. The question that I was asking was for those people who want to do their own taxes and are using those computer software programs, who are they good for?
Yeah, I would tell you that they're good for entry level workers. For instance, maybe your children who have part time jobs, or that a very simple return, W-2. It may be at the most one property. They would be a good fit for. Outside of that, like I said, once you get to the complicated returns, while they probably can process complicated returns, you do want to get in front of somebody, because those systems, what they typically do is they have questions that they kind of ask you in terms of to prompt you to think about things that you might qualify for. But if you're not really, thinking about it in the terms of the way the question was written, you might overlook it, and it could be something that you do qualify. So I would say, outside of just if you have a job and and you go to work and you have a part-time job, that's okay too. As long as it's W-2, they could work for you.
Okay, so one of the things I think that people will see, and I remember that 1-800 tax 1040 number is still being used
Mhm.
by the IRS. What information can you get and what information can you not get if you call the IRS and are able to talk to one of the IRS staffers, and what kinds of things should you make sure that you have to make sure that your stuff isn't lost, misplaced, whatever?
Yeah, generally, well, one, if you can get someone to talk to, because as we alluded to in earlier questions, the layoffs are less people are there to pick up the phone, right? But there is a website. Usually, there's a link that you can go on at the IRS website to kind of one also. To your point, if you're missing some documentations, you can pull some of those transcripts from the website. As like I said, as companies put that stuff in, it goes to is routed to your Social Security number. So you are able to see, if you have included all of the things in your return, from that site. It also, so, but pretty much if you're trying to talk to somebody, that might be difficult, I would assume, but always try. Or you can employ a firm like us to sit there and kind of act on your behalf to find out if there's something that you're missing. In that case, you would have to have a power of attorney from us, which is a standard IRS form, and we'll just submit the form and then talk for you.
Hmm. What would trigger an audit, and what should you do if you are audited? How would you know? Would you get an email? Would you get a letter? How would walk me through that?
Generally, the IRS will send you an email that says you're audited. At that point, I would always recommend that you contact, a tax person, a tax professional, such as our firm, because sometimes you may be audited for one thing, but then they find something else because you have said something, right? You always want to just focus on what the audited, item is. Now, in terms of audits, could be random or they could be based on a certain threshold, met. For instance, say, for instance, you are, you have for the last 3 years, showed a loss on the business, right? Well, the
Hmm.
IRS might be questioning whether you even have a business. Are these really, findings? Because at the end of the day, everybody's in business to make money. So how can you for 5 years show a loss and you're still in business, right? So I always tell the story got to make sense. So that's the first thing. Make sure that your story makes sense. Therefore, you might not trigger an audit. Maybe you have a high number of, you say you're only one person in your company, but you got expenses in a certain area, that are over the threshold of what is reasonable, right? That might trigger an audit. So I would always I tell people that, if it ain't making sense, it ain't making sense. You know what I mean?
Hmm.
You set yourself up. So, and even, as a tax preparer, we have a duty to ensure that we're not putting anything down that don't make sense, right? That we have done our due. We're not auditors, but we must do our due diligence to ensure that, something, is within reason.
Hmm.
So,
So if somebody is audited, um, is there any time when a person who is being audited, which in which they can defend themselves, particularly if it makes sense? Okay.
in terms of an audit, like I said, certain things just might be an administrative audit. You forgot to, like as I mentioned, to file something that came in on the back end, right?
Hmm.
So that's an automatic audit. Certainly, you could defend yourself. I mean, basically, it's the government will tell you to amend your return and you owe X dollars. So if you don't believe you owe it, then you need to probably come to a tax professional like us to kind of say, no, here are the situation. I don't think we owe it, and then we could defend that, right? So it just depends, though. There are many reasons that you would get an audit, but generally it's something that was out of balance.
I see. How long should you keep your tax documents?
Well, the clock starts when you file. Okay, so you can at least 5 years after you file,
Hmm.
just to make sure you wouldn't be subject to an audit, right? But again, if say for instance you haven't filed your return since 2017, if you will, right? And then you file this year, your clock did not start in 2017. Your clock started when you filed.
Hmm. Because the reason why I ask, and this happened to me, this happened many years ago, where I kept my tax returns, and this was back in the late 90s. And I remember this because I received an email
Hmm.
from the IRS. No, I don't even think it was an email. I think it was a letter.
Okay. Yep.
I think it was a letter from the IRS um, that said a document was missing. And there was a number to call. I called, I spoke to someone at the IRS, and they said to fax the document to them. And I remember
Right.
saying,
Oh my
no.
God. Right. Where's the document?
Right. They, because I remember talking to the lady, and she gave me her name, her IRS ID. Um, and she said you can, fax or mail the document. Um, or no, let me back up. See, like I said, this was a long time ago. She asked for the document, and I said I still have it, and she was incredulous that I still had it. And she said, "Well, can you fax it and or mail it to us?" And I said, "I can mail you a copy of it."
That's absolutely right.
But
Right.
I said, "I'm not going to send you the original document." And I did send it. I can't remember whether I mailed or faxed it. I think I may have faxed it. And literally within a week, I received another letter from the IRS
Mhm.
saying that whatever the issue was,
Was
it
resolved.
was it was satisfied. Yes, it
Right.
was
Right.
resolved.
Right.
But back then I don't think we had the same kind
Technology.
of
You said
technology.
90s, so yeah, we were in paper
Right.
based back in the
Paper, yes.
90s.
Or the that's right. It was a letter. Um, or the kind of healthy skepticism that you that Miss Sally Mae or
Yeah.
Aunt Sam, not Uncle Sam, but Aunt Sam was who she says she was. Eh, But I do remember she's when she said, send or fax the document, and I said no, I will send you a
A
copy.
copy. That's correct. Yeah,
You
that's
know,
always good to keep your return. And usually, like I know a lot of accountants now, if you're getting it done by us, have portals that we download the document to that you can pull, retrieve it if you will. The IRS again is another source if you have that issue, but where again your tax transcripts can be pulled through their site if it because people have to submit them to them. And then also just things like expense reports, those types of things. Make sure you do backup copies for your business if you have a business, because again, you have to prove that those expenses existed. A lot of people might change softwares, right? And it's in the cloud especially. And when the subscription in, they keep all your documents. So I would frequently I would encourage your listeners to back up their records in that regard and have it in some secure, disk or something. I'm on disk. What we do now, we do the USB.
yes, the USB, yes.
Yeah, just to have your document that support your taxes backed up, so that if you are audited years later, you will have that record.
Oh, and my goodness, before I forget, there are a lot of homeowners who have things done to their homes that make them more energy efficient, and there are federal
Mhm.
tax credits attached to
Absolutely.
that. How does that work?
Absolutely. Certain tax credits, again, just you might buy an appliance or something that is energy efficient. So anytime you make a major improvement to your home, bring that to the attention of your tax preparer. Again, I'm not sure how the prompts are. That might be a reason to go to the tax preparer, because again, you may not be thinking about that. It happened in January, and now you're filing taxes a year later, right? But it could be putting in an energy efficient heater, hot water heater, or anything like that. There could be a reasonable this that you might be able to qualify for credit, not only at the federal level but also at the state level. So keep that in mind as well. At
You
the
said not
federal
only at
level,
the federal level, but also at the state level.
That's correct. It could be state granted tax credits. So also remember that the federal doesn't necessarily have, while it mirrors the state in certain cases, there might be opportunities at the state level for energy efficiency and all of that regard. So also bring any type of thing to the attention of your tax preparer so that you can, even if you think it's not significant, it might help you.
And finally, for those who have home offices or work from home,
Mhm.
how does that work?
Well, that's big now, given that we had remote, working after COVID, it spiked up significantly. But remember, when you are claiming a home office, it has to be a dedicated home office. It can't be shared for multiple purpose uses. So ensure that, that is that. Basically, you take the square footage of the office. Say your house is 1,000 square feet. Your home office is 100 square foot. Is a bedroom, size of a bedroom. You would get that 1/10%, that you could write not only your mortgage off for the home office, because technically you're kind of leasing it to yourself for your
Hmm.
business, but the associated electricity bills or anything that relates to the house for that piece that's going for your business or the home office it pertains to. Now, generally, it's an easier battle to fight for a home office if you have your business, but if you got a home office and you are working as an employee, you may not qualify for that.
Mm. Lots to consider, a whole
Yes, it
lot to
is.
consider. Salome Tinker, thank you so much for being patient with
No,
technology.
thank you. Thank you for me too. So it's
Yeah,
a two-way street.
thank you so much. I really, really appreciate your time. Is it appropriate to say happy tax day? Happy tax filing day. We shall see. That
Look,
is
only if
the
you get the
daily.
refund back.
Yeah, how about that? Exactly. That is the Daily Drum for this Tuesday, April 15th. I'm Harold